Hello, friends. Welcome to OAWA's weekly update on money and economy. We begin with an overview of the global financial markets. Recently, the Financial Times reported that in this year 2024 so far, global bonds and global stocks led by the US markets have shown divergent performance, with stocks showing gains and bonds showing losses. The reason being the resilience of the US economy on one hand, reflected in employment data, which is boosting stocks, and delay in rate cuts leading to disappointment for bond investors. Some analysts feel bond equity correlation is shifting back to negative this year, with US equities making fresh record highs, but US yields also rising. Markets seem to have become more comfortable that inflation is heading back down to central banks' target levels, while also gradually starting to accept that policymakers will not be cutting borrowing costs as quickly as investors had been hoping for. Moving on to news on the domestic front, India's weight in the MSCI index is going up even as China's is coming down. Index provider MSCI, that is Morgan Stanley Capital International, has increased India's weight to 18.2% after the latest review, while China's weight has been reduced to 25.4%. The gap in weightage between Indian and Chinese equities on the MSCI Global Standard Index will be the shortest ever, and analysts expect this gap to narrow down further. Tata Motors and Macrotech developers have been introduced to the MSCI domestic indices as large caps, with PNB, Canara Bank, and Embassy Office Park REIT joining the mid-cap segment. As per analyst estimates, this increase in weightage is expected to bring about $1.2 billion in inflows into Indian equities. Moving on, India's much touted international finance destination, the Gujarat International Finance Tech City, that is the GIFT City, is seeing some significant fund activity in recent times. The Abu Dhabi Investment Authority, which is the largest sovereign wealth fund in the UAE, has become the first sovereign wealth fund to get approval from IFSCA to set up a fund at GIFT City. IFSCA is India's unified regulator for international financial services with a mandate to develop and promote India as a global financial hub. The UAE-based wealth fund plans $4 to $5 billion in investments via India's new finance hub. Funds which set up at GIFT City can invest in Indian and foreign equities and debt securities, among other assets. Finance Minister Nirmala Sitharaman, while announcing the union budget earlier this month, had said the government aims to build up GIFT City as a gateway for global capital and financial services for the economy. And finally, we end with news on Paytm. The company has been facing the heat after the strict action taken by RBI against its subsidiary Paytm Payments Bank Limited, that is PPBL. The RBI governor had said its actions were proportionate to the violations done at the bank, and the bank was told repeatedly to comply with directions, which didn't happen. Post this, there was news that one of the independent directors, Manju Agarwal, resigned from the board, although the reason cited was personal. Shares of 197 Communications, which owns the brand Paytm, have plunged further below the Rs 400 mark after the comments by the RBI governor and have been continuously falling this week. That's it from us this week. Please do visit our website www.oawa.in for information on our courses. See you next week.